Good morning, this is Mark Boud of Real Estate Economics. Thank you for joining us for our weekly webinar series. This morning's topic is the Pheonix market. What I'm going to do is go to our website and actually draw some information that is available for anyone who would like to use this tool. You can see that I've already logged on to our website at realestateeconomics.com. I'm going to go to Products, and I'm going to share with you some information regarding the Phoenix metro area using our closings report. To do so, I'll hit Run Report. That will take you to a map, and from this map you can see that we cover a 13-state region. I'm just going to choose those counties that correspond with the Pheonix MSA, which is Pinal County and Maricopa County. Once you do that, we'll choose all of the cities within those particular counties, as well as all of the zip codes. And then once we get to our filter area, it defaults to the most recent 3 months, since this is such a large area and there's so much information in this area, and we want to see the most recent trends. I'm just going to choose the month of February, the most recent month for which we have data. And I'm going to go ahead and click on that report to show you the overall transactions that have occurred during the month of February 2012. And let me enlarge a little bit so you can see a little bit more detail. Now immediately you can see on the pie chart that 23% of all of these transactions, in other words these yellow dots here, are represented by foreclosure or REO sales. Another 13%, the red dots, are associated with foreclosures, properties being lost to the lender. 6% are associated with new home builder closings, and 56% are associated with the resale market, existing home sales, shown by the blue dots. And you can actually run the report that corresponds with this map and show what the overall trends have been during the past 24 months. And I'm going to go ahead and do that. Once you do that, then you are given a choice to either remain on the map or go to your personal information vault. I'm actually going to go stay on the map for just a moment, and I'm going to go back to my Filters tab and show you what this market looked like just a couple years ago. Let's choose February of year 2010. And before I run this, keep in mind 23% are foreclosure sales, 13% foreclosures. And now let me run this updated report that goes back a couple of years, and you'll see the difference, and you'll see the progress that we've made during the past 24 months is actually fairly dramatic. Despite the fact that this market is still in trouble, we still have an enormous amount of distressed inventory. We've made some improvements. So here we are 24 months ago, February of year 2010. 27% of all transactions were associated with foreclosure or REO sales. And this is what I wanted to point out. An astounding 31% were associated with foreclosures, properties being lost to the bank. And believe it or not, that was actually down from where it was in 2009. New home building closings was only 4%, and traditional resales were only 36%. I won't run this particular report because this information will actually be shown on the other report that we just ran a bit ago for the most recent month. But let me go to our My Information Vault and share with you what this particular report looks like on an Excel spreadsheet. Now, it's important to us at Real Estate Economics that we provide you with an actual tool as opposed to a PDF document that is static. And so we deliver our reports purposely in MS Excel format or in MS Word format so that you can use it, so that you can copy and paste, so that you can run various scenarios. So here I am in my information vault. The information is now run for this particular region. I'm going to go ahead and download that. And what will happen is it will actually pop up into an Excel document. And it takes a few seconds because we're using the entire region. It takes a few seconds to populate. Here it is, the overall area for Pinal and Maricopa County. It's listing all of the zip codes within those two counties. We ran it for the month of February. What this information shows is that there were 10,054 transactions during the month of February, sales transactions. Now, we used to show this for all transactions, including foreclosures, but now we think it's wise to itemize or line item foreclosures and separate those from total sales. So 10,000 sales have occurred, and those sales are composed of traditional resales, new home builder closings, and foreclosure sales. That's about 10% higher than it was a year ago, and quite a bit higher, about 30 or 20% higher than it was 2 years ago. Now, prices, the overall prices for sales transactions have continued to head downward. They're 2.9% lower than they were a year ago and lower than they were 2 years ago. Still, we're trending slightly downward in terms of unit size, and we're trending slightly downward in terms of price per square foot. If you look at just the new home market, though, it shows a bit of a different story, a little bit more encouraging. Now, part of the reason this is more positive is because new homes are still fairly scarce. Even though the percentage share has gone up to 6.4% from 3.9% a year ago, only to sell only 751 new home closings in the month of February is far below the historic norm. And because that supply is low, or partly because that supply is low, and also because we've seen some economic improvements, we're actually seeing an upward trend in terms of price. Prices have increased for new homes to $237,000, up from $237 about $30,000 a year ago. Unit sizes have declined slightly. Price per square foot has gone down, which looks a little strange given this increase in price. But keep in mind that we don't necessarily have a full sample of all unit sizes for new homes. We're just tracking that sample which we have. So whereas the price is reflective of all new home closings which occurred, the unit size and the price per square foot reflect only about 65 to 70% of the overall sample, as it's hard for those unit size figures to be captured for all new home transactions which occur. This is a great summary. You can see that the charts and graphs that show the 24-month trend in price per square foot, and volume, and so on. Look at this big volume gain in resales during the past 12 months. That's impressive. It's also impressive that you've seen a huge drop in foreclosures. You've also seen a drop in foreclosure sales, but the fact that foreclosure sales are now well above foreclosures suggests that we're experiencing a pretty rapid burn-off of distressed inventory in this market. At least we were in February of year 2012. We've also seen an increase in new home closings. That's about the first increase that I've seen in this particular market during the past few years. That's a good sign. We're seeing a little bit of a loosening in the banks at 84% loan to value. That's an encouraging note. It means that banks are perceiving less risk and are willing to lend a bit more in terms of the percentage of the total value of a given home. So this is what the overall report looks like. There's an enormous amount of data on other sheets. I'm just going to very, very quickly go through these. And again, the whole purpose of this is meant to give you a tool to analyze a given site or the price support for a given site or region. Now in this case, we ran this information for the entire region, a 2-county region. You can actually go down to a zip code, you can draw a polygon, you can draw a radius, and get right down to a specific area where you are interested for this particular region. And believe me, the areas do differ quite a bit from this region, from one area to another. So it's important to understand those nuances and variances among separate areas of the region. The last thing I'll show you for this particular webinar is the residential economic review for the Phoenix market. We just put this together. It's a complimentary report, 2-page report. It takes the place of our previous residential economic review that we published during the past few years that was not free. This one is free. If you want a copy of this, simply call either Judy Duell or Sandy Rivera, or send them an email. They'll send you a complimentary copy of this. This is a summary of what has gone on in the region during the past month. It's a March report, but the data actually stems from February, as we have about a month lag. You can see the map that we generated on our website. You can see the summary. I'm going to enlarge this a little bit. The summary, year-over-year summary of the new home market, the existing home market, the distressed home market. You can also see the corresponding price lines that go with general unit sizes or home sizes in terms of the new home price line, the resale price line, and the distressed price line. And then finally, we add a bit about the economic recovery to show our 12-month forecast in jobs, as well as the overall trends in job growth or loss that has occurred. We cover a 13-state region. This morning's topic, as was mentioned, is Pheonix, but we'll be offering this kind of webinar throughout these 13 states during the next quarter, and then we'll begin that cycle again. But again, if you want a quick, brief synopsis of what's going on in this market, we invite you to subscribe to our residential economic review at no cost by contacting us. Thank you for joining us this morning. We hope you'll join us next week as we present similar information for the Wasatch Front Utah market, which is a combination of Utah County and Salt Lake County, generally the Provo and Salt Lake areas of the Wasatch Front. Thank you. Take care.